Well, the market breaking its 200-day moving average today, but really just failing to close again above that 4,300 mark. What were the main drivers today, and where to from here?
I think there were a couple of things to have been watching today, and in terms of the market, the one thing that really stood out were the volumes that went through. A massive $6.6 billion worth of stock being traded. Part of that was technical buying after, as you mentioned, Moira, the 200-day moving average being broken quite confidently today, and the other part was end of month portfolio rebalancing. For the month of February, we've seen a gain of 0.8%, and if we have a look at the standout areas, it's been the industrial sector up by 6.3%. And the consumer discretionary sector up by 5.3%. In fact, 2012 has been a good one for the market so far. The ASX 200's gained around about 6%. The energy and the industrial sectors have been absolutely outstanding, gaining more than 13% in the year to date so far. And in terms of individual stocks, well, some massive performances. Billabong's a standout, gaining 74% in the first 2 months of the year. And we've also seen the likes of Boat, Longyear, Goodman Fielder and One Still gaining more than 50% in the first couple of months. So altogether, a pretty strong day on the market, up by 0.8%. We did move above the 4,300 point mark, but by the end of the session, you can see that on the close, we came down below that at 4,298 points, but that 200-day moving average at 4,282 points has been broken. We're hoping to see a follow-through of that tomorrow. And I guess some of the things helping our market at the moment are the lower oil prices that we're seeing, the long-term refinancing operations by the European Central Bank that we'll see tonight, and the materials space doing very well. We saw Fortescue up by 2.8%. Rio Tinto, which was trading ex-dividend today, was positive for most of the session, but in the end down by 0.4%.
We heard from Harvey Norman today with a better than expected first half number. It was still down though. Investors though really seem to be focused on that like-for-like sales number, which did fall over 6%.
In terms of the actual result, it came in ahead of expectations. While we did see profit down by 2.1%, the $129 million beat market expectations. But I guess investors more focused on like-for-like sales, and it does still look like a pretty soft retail environment, and sales down by 6.1%. And if we have a look at some of the impacts on Harvey Norman's business at the moment, I guess the key one is consumers that are reluctant to spend. Also, if we have a look at the housing data that's been coming through, that's been quite weak. So that's quite important for Harvey Norman, especially in terms of its homewares as well as the electrical components of its business. Now, Harvey Norman also has a property portfolio worth about $2.12 billion, and I guess that helps to strengthen the balance sheet as well as give a stable source of income. But the big question for Harvey Norman is how to unlock this for investors, and it's already watered down hopes in the past that it could perhaps spin off its property portfolio into a separate vehicle. So while the property portfolio is quite attractive, the value in it is quite difficult to unlock. So unfortunately, the market really reacting to the disappointing sales numbers and the still very weak retail environment, and the stock down by 4.2% today.
Period of time now where there was a bit of a decoupling from the United States market in terms of how our market was heading. A real focus now on China's performance in terms of afternoon trade locally, as well as any economic data coming out of China. Why now this correlation back to the United States market's performance, and obviously those markets in turn really giving us a bit of direction of how we'll trade?
Well, today we did seem to follow the US market, but overall in 2012, in fact over the last quarter and the last year, we do have a much stronger correlation with China. And if you have a look at Australia versus the US, we've seen a real disconnect in terms of performance over the last month, over the last year, over the last 3 months, and in 2012 as well. So it does look like Australia much more closely aligned with China's performance rather than the US, and that's understandable given the composition of our market. Heavyweights like BHP, Billiton, Rio Tinto really influence our market quite strongly. But today, as you mentioned, a bit of a disconnect. We saw the US futures trading higher, the Chinese market lower, but the Australian market did see some strong gains. And I think part of that was technical. We saw some strong technical barriers being broken, and that helps to support a move on the upside. And in terms of the US as well, some strong technicals there. I guess to take our market to the next level and also our currency to the next level, what the market is looking for are signs of strong growth still coming through. And we've seen some strong stronger numbers coming out of the US, and we want to see a continuation of this this week. So if we have a look at some of the things that the market's keeping an eye out for, on Friday we do see the ISM manufacturing numbers out of the US, and also on Thursday we see China's manufacturing numbers through the PMI numbers. So the market's going to be keeping a close eye on that. But of course, the key tonight is going to be the long-term refinancing operations, and in particular, the size of this operation by the European Central Bank, because the market has already priced in a 400 to 500 million euro operation. So if we do see a number around this mark, we shouldn't see too big an impact in terms of the markets because it's already priced in. But of course, if we do see a smaller long-term refinancing operation, then that could be a negative for the markets today. So a few things to watch out for in terms of the long-term refinancing operations, but number one would be the size of it.